All right. Hey there, everybody. Chris Franks with Texas West Capital. It is just a few minutes after 11 a.m. Central Standard Time here on a overcast, a little bit gloomy, a little bit cool kind of Friday morning here on Lake Conroe. Good to have you all checking in. Hopefully you guys are doing all right. We had an NFP release this morning, non-farm payroll. Surprise to the upside. So jobs came in greater than expected, but still on a downtrend overall. And I think this is where people are getting kind of confused out there and whatnot when they talk about Fed pivots and all that. Before you have a Fed pivot, you got to have a slowdown. And everybody's talking about Fed pivots. And what I've been trying to get you guys to concentrate on is the slowdown, right? The drop from 75 to 50 basis points. Now, Jerome Powell spoke earlier this week, very dovish. If you thought it was hawkish, check your emotional bias. I'm going to be honest with you guys. He literally just about said, or did he say, that they were going to quite potentially slow down to a 50 basis point rate hike come this month, December. Words are hard this morning, guys. And so, that's significant. Why is it significant? Because it means that a pivot is likely incoming. Now, that doesn't mean it happens next month, but when you're in the market, markets are forward-looking, right? So when they're deciding, okay, we want to sell or want to buy, a lot of that they're trying to base on what they think the Fed's going to do. And, the rate hikes have been so extreme as they've been, that any reprieve is positive news for the markets, right? So we had that earlier this week, and the market then rallied up to like almost an 80% chance that it believed that they were, using the FedWatch tool that I post there usually weekly or sometimes a few times a week there on Twitter. But that came up, and so previously they were around 75%, and then it dropped to 70% right before Powell spoke, and then it popped up to almost 80% after Powell spoke, and now it's actually, let me see here. It's at 72.3% after this morning's jobs report, right? So again, jobs came up, surprise to the upside, more than what was expected, but still in a downtrend overall. So what does that mean? That means like interest rates, right? So even if the interest rate hike drops to 50% or to 50 basis point from 75 basis point, it's still rising overall, right? So even though the jobs came out at whatever it was, 266,000 or whatever this morning, it's still less than the 280,000, 283,000 with the revised previous month jobs, which was less than the previous months, which was less than the previous month, you see. So even though there's still job creation, it's lessening, it's coming down. And so again, it's not, you're not looking for that flip point. What you're looking for is a deceleration of what's been going on. And so we see that with the jobs. We see that with the Fed here. And so what does that mean? That means we're probably going to have, I don't know, are they finally going to say it's a recession? I think so, maybe, getting into Q1 of next year. But, again, all this, the Fed is always playing, it's always reactionary. It always goes too far with whatever it does, right? And so the likelihood is that they've gone too far already. As they said, as Powell said, they can't fully recognize the effects that they've already had on the market. It's not fully played out is what they're saying, right? In other words, what he's saying is, listen, I don't think that we can continue being as aggressive as we've been because we still haven't seen the effects of what we've already done aggressively. This historic aggressiveness that we've had. So again, I think we'll continue seeing the interest rates drop. The interest rate hikes kind of drop. We've been talking about it. I think, the Fed's going to have to close off this quantitative tightening, and again, that'll be next year. Quite likely, end of Q2, beginning of Q3 even, right there at the beginning of summer, I think is a good possible point at which we see the Fed actually reverse and start dropping the interest rate a bit. Everything's kind of down, PMI, all that kind of stuff, guys. Like I said, the jobs are going up there. I did post a link, if you guys are following me there on Twitter, to another, maybe a better way of looking at job tightness, right? The Fed's been all this, there's almost two jobs for every person looking out there. But there's another way of looking at it. If you look at it that way, it's like half that's like basically a job for everybody looking. And so the market then is maybe a lot more loose than what the Fed believes it to be. And the problem with that, again, is if they're hiking, because they are hiking, based on jobs, right? Based on job growth, to slow that down, right? Well, then they, again, are quite likely doing way too much more than what they would need to do, if you believe that kind of thing. In other words, so, they're forward, right? So they'll do their things here, right? So whatever they've done here in, up through November, you'll see maybe over here in February, March, April, right around there, right? So if they continue doing their thing, as aggressive they have, then it's a bigger shock, a harder action on the market, right? So that's what we're kind of looking at. Nothing's changed. Everything, I think, still looking the same way when it comes to the Fed and the economy and everything. We had the Dow pop up above that mid-August swing, the mid-August swing high. I told you guys that's what we're watching. If we get that, it increases the likelihood quite a bit that we'll probably see an new all-time high, because that locks it in basically to 3 waves down, which is corrective off the all-time high. The NASDAQ and the S&P have not hit that yet. Again, we're going to look at all those charts today. But if they do, that would be a big confirmation on that. The dollar continues to look anemic. It had a little pump this morning. Everything had that knee-jerk reaction off the jobs report release. But so far, those knee-jerk reactions look to be in 3 waves. So depending on what chart you're looking at, it looks like potentially, like on the dollar, we'll look at that. It looks like just a 3-wave corrective, 50% retracement, a 4th wave. So what we would look for, secondary target on 4th wave, is a 50% retracement, right? On other charts, it looks like potentially the completion of a flat correction. So yeah, it looks like things are going to continue and ultimately in the direction they've been going here for a while now. After this knee-jerk reaction stuff got over with today. So, we'll kind of look at that as well. Who's here already, man? Data, Nevlusi, and Fiboswani, what's up, guys? Mark, Brian Riley is here. Frank, what's up, man? Better late than never, he says. That's right. It's just show up, man. Life, guys, life is about showing up. I've kind of got in this thing this morning, and this happens every once in a while, guys, right? I get out there and I really start talking about life and about, the way people view life and the way you need to view life and the way that the things that you need to recognize so that you can change, right? So that you can be as successful as you want to be, whether it's in trading or other areas of your life, guys. Remember, I'm not just all about trading here. One of the biggest compliments I get from people that hang around for a while is they say, hey, the trading's great and what I'm learning there is great, whatever, but what I really appreciate are your views on life and the way it's helped me become more centered or change the way in which I've been viewing it, and I've been so much happier since I've done that. Guys, that, to me, that's what it's all about here every day. I know I talk about trading, but man, if I can get you in the right mindset for life, the trading will follow. The trading will follow, okay? But if I can get you in the right mindset for life, man, you've got so many opportunities that you don't even know you have yet. And you'll start to see them. And then you'll be happier. It's so crazy, guys. And for people who are not yet at that point, it's hard to understand. It sounds like a lot of BS. It sounds like a lot of smoke being blown up their rear end, stuff like that. But man, once you make that connection, once you get that, your life is just so different. I promise you. I had to go through it myself. I haven't always been this positive about life and this positive about things and so in control of my future, right? I had to learn these things. I grew up like most everybody else whose parents are kind of like, listen, money is this thing, and it's not the biggest thing, and, don't rock the boat and just be grateful that you've got some, and man, so I had to work through all that like pretty much most people do, right? Very few people have parents who have already transcended that and gotten to that next point. So I've been there, I've done that. So I understand what it sounds like a lot of times to those of you who have maybe not made it that point yet. But man, oh man, I tell you, it's so worth it. It is so worth it. If you can finally let go, take that to heart and really start listening and applying the things that I talk about, man, oh man, and not just your life, but your trading, everything that you do just becomes so much greater. So yeah. Let me see here. You guys have to excuse me, I got a little issue with my throat here. Go figure, right? Seems always something here lately. Let me see here. Kimosabi, what's up, man? He said Powell sounded concerned. He did, right? That was the whole thing. He sounded, before he was very hawkish, very, oh man, we're going to do this, we got to do this, we're going to stay the course and blah, blah, blah. And this time he's like, well, maybe we should be, kind of slowing down a bit here. I'm glad you picked that up, man. I sound way better. Thank you. Yeah, I feel better. I feel more energetic. Nowhere near as fatigued as I've been for so long, which has been crazy. Excuse me, Matthew Bolts, what's up, man? Budman in the Throb middle while, buddy. He says, ain't surging in job numbers and unemployment should be categorized as bad news, since that means more people have more than 2 jobs, and even a single family would have at least 3 jobs. Man, that sounds awful, doesn't it? It does. But again, the Fed, the way they look at it is they look at, the way they're looking at it is a certain way, which just looks at those numbers of those people actively looking for jobs and whatnot, right? And so by the way they look at it, it looks like there's 2 people for every job out there. So it looks like the labor market's really tight, right? But again, I gave you that link there, and you guys really should check it out if you get a chance. It's a quick read, but it proposes a different way of looking at it that actually seems a lot more correct. And that one just says, well, just 1 job per 1 person, right? So the market's a lot looser. If you look at the way the Fed looks at it, then it looks like, oh my God, businesses are struggling to find new people, whatever. But we know business has been laying people off, right? The heart of what they're talking about, this other way of looking at it, is that businesses tend to slow down. They don't put as much presence on hiring when they're pulling back, when things are slowing down, when the economy's slowing down. Whereas when it's really rattling off and running hot, they're struggling to get people in there, right? They're putting their hiring top of mind. And so that could affect the way in which the jobs are available versus the people available, the way that the Fed looks at it, right? So in other words, again, the way the Fed looks at it may not be necessarily the way it is. And I think it makes a lot more sense when you look at it. Again, I know a lot of people who are business people. They own businesses. And, sometimes, depending on what they're doing there, they're struggling to find people and whatnot. Excuse me. But not because people not because there aren't people out there looking for a job, but just because a lot of times the people out there looking for better jobs, they think they deserve better. They think there's more out there. And those people sit there without jobs for a while, which is kind of crazy, rather than take a job and get in, right? And this is for people that have that are offering positions that pay more than minimum wage, good benefits, stuff like that. So I think there's a lot of other things going on there, but I don't think the way that the Fed looks at the job tightening is really probably the best way to look at it. So yeah. HJ, what's up, man? Good to see you. Oh yeah, and Budman talking about the credit card bubble expanding. Yeah. So you guys may have remembered. So we had the pandemic hit. The lockdown started there in March or whatever of 2020. And then by May or June or whatever it was, we had like the largest savings that we ever had. It was something like 35%, right? And that held off for a while, and everybody's paying down debt. Remember, I talked about all that? And now we're opposite of that now. Now everybody's running up debt again, and they have no savings. Based on what's been going up here, we had, again, the bottlenecks and whatnot going on there. I've actually seen some pretty interesting stuff out there suggesting that the Fed itself is the cause of the heightened interest rates, overall, right? In other words, the Fed is, it didn't need to be where it was, but it got to where it was because of the way the Fed was interacting, right? So a lot of interesting stuff going on there, a lot of stuff to kind of go through. I'm still looking at a lot of it myself. By the way, guys, if you haven't done it yet, jump on over to, let me see if I can put it in here. Sign up for my, there we go. There's a link. themarketbreakdown.substack.com. Sign up for my weekly newsletter, guys. I relaunched it last weekend, so I'll put out another issue this weekend, and we'll start getting more and more into the macroeconomics and the stuff like that. It's probably taking me a few weeks to get back to the way I was doing it before. But looking at those things and then explaining them, but through the charts, right? So looking at the charts and using the charts to explain what's going to happen with the macroeconomics, and taking issue with the way that people say, oh, the macroeconomics are leading the charts, right? Because we don't believe that, right? We look the other way. We think things are happening that lead to what you see on the chart, not the other way around, right? Most everybody else out there looks at the chart and they say, oh, well, the chart's doing this, so people act this way. And I'm telling you guys, if you hang around and listen enough, you learn enough, you'll find out that's not exactly correct, all right? Errol Quinn, what's up? You ever consider a career in motivational speaking? I don't know anybody really willing to pay that to see me talk. Again, guys, even this morning, I had somebody jump up, right? I had a follower, somebody who's following me jump up, and they took issue with the fact that I'm giving, right now, guys, you can jump over to howtotradetowin.com. You can get tier 3 for 1 month, no auto renew, just 1 month. And if you don't want to stick around, no auto renew or anything, $50, guys. Normally we charge $200 a month for that, right? So Cyber Week sale thing kind of going on because people were asking. I said, okay, yeah, we can do that. And they took issue with that, right? And they've never bought a product from us, never done anything there, yet they're talking crap about us online, right? And, that got me thinking, again, about the way in which people view the world. Are you a victim? Do things happen to you, or do you make things happen? Do you believe in your ability to produce or not? And people like that are very victim mentality. And you have to be careful about that because you'll find a lot of people like that in your life. Have you guys ever got excited about something that you were going to do and you told a family member or a close friend and they started talking down about it? You're like, man, I'm going to go start this business to do this. And they're like, yeah, in this economy but you don't have any experience in that, whatever, right? And they're just very Debbie Downers, right? These kind of people exist. And this is most of the people that you'll ever meet, people, guys, not just in your life and not just, really close friends and family, but like in my case here, people that I've never even talked to, people online, right? They want to talk crap about what you do without ever having been a part of it, right? And so if you're out there, if you've got things that you're trying to do them. The biggest reason people aren't successful when they get out there, beyond that victim mentality, is that they never actually start. Everybody's always waiting for things to be perfect, right? People are like, oh, I want to trade, but I need to wait for the perfect setup, right? I got to go out there, make things happen, break things, right? Now, that doesn't mean you're just jumping in just because, right? But when you're looking at starting something, let's say starting a business or going back to school for something, right? People often wait for the conditions have to be right. They're always waiting, right? The problem is they never take action. They never go out there and do it, right? When it comes to learning how to trade, people are like, well, I'm going to wait till I have a little bit more money. I'm going to wait till the market's up more, whatever. And the problem is they're always waiting. They're always waiting to wait, right? And so the one thing I found in life, is just to go out there and do it. Learn it, figure it out along the way. But action is the most difficult step, and yet it's the one thing that's required to get going, right? So regardless of what it is, whether it's trading, whether it's going back to school, whether it's starting a business, whether it's changing a job to something else that would make you, happier, that would be more fulfilling to you. Stop waiting for the perfect time. There will never be a perfect time. And what that means is you will always make excuses while you're not doing it. Jump in, do it, break things, guys. Make things happen. The only thing keeping you from being successful in your life, in trading, in school, at work, business, whatever, relationships, is you. That's it. 100% you guys, okay? I believe in you more than most of y'all probably believe in yourself. And I don't even know a lot of y'all, like really, right? But I believe in your ability to be successful if only you would believe in yourself to do it too. Seriously. I really do. And that's probably why I spend so many hours doing what I do at TWC and doing what I do here with you guys and talking to you, in other places and everything, because I always think to myself, man, if I can just get you to see how successful you can actually be. Because you guys are great, man. You tell me where you struggle with. You don't often have a lot of problem telling me. And you tell me what you want to do with life and where you want to be and where you want to get to. And man, I see that. I'm like, man, you know what? You can really do that. And I honestly believe it. And not because I'm naive, but because I know what we can do if we put our minds to doing it. It's just hard to see that oftentimes when you haven't actually made that step yet. So, Sorry, I get a little bit on that old personal, betterment thing there. But I really, guys, I tell you all the time, I believe that how you are in life is exactly how you're going to see the charts. If in life you are a victim, if things happen to you, you don't happen to them, if you feel like you don't have any control, then when you get into trading, you're going to think that the market happens to you, that Wall Street steals from you, that whales take your money, that everybody's out to scam you because you don't believe in you. That's what I'm talking about, guys. You don't really believe. You're going to talk a lot of smack. You're going to try and make it look like you do. You're going to lie to yourself, lie to everybody else. You're going to think that you look like you believe in yourself and that you believe in your ability to produce. But in the reality, anybody paying attention can see that you don't. You're only lying to yourself and everybody else. The good thing about that is, this is not me putting you down. This is me saying, listen, this is the reality. The good thing about that, if you actually accept that and bring that in and recognize that, is that you can do something about it now. The big problem people have is they let things happen to them and they never actually accept that they had some play in that they were somehow part of that, right? So they can never let go. They're always the victim. And if you're always the victim, how can you ever expect to be consistently profitable as a trader? You have to believe, right? You have to believe that you can affect change, that you can make profits, right? And you can't possibly believe that if you believe everywhere else in your life that things happen to you, that you have no control over, right? Telling you guys, it all starts, being a successful trader all starts right up here, getting through that emotional, that psychological nonsense, right? Let me see here. Hank, what's up, man? Let me see. Who else is here? Is that Diego? Hey, what's up, buddy? Hope you're doing well, man. Let me see here. Data's here. I think I said hi to you, Data. I'm saying hi again anyway. Kimosabi says, waiting is part of trading. Waiting for the setup, waiting for fills, waiting for breaks, waiting for stop loss and take profit. Yeah, but you have to actually take those actions, right? You can't just wait and then wait and then wait and then wait and then never get in, right? Some people, are, and you're going to at some point, you're going to struggle with this analysis paralysis thing, right? And I'm going to tell you guys right now, a lot of that analysis paralysis stuff can be conquered by dropping the size of your position. It's the fear of losing money, right? But the fear of losing money isn't so big deal when it's only $1 or $10 and you've got a portfolio worth, $10,000, right? Or even $100. If your portfolio is worth $10,000, a $100 loss is really nothing, right? It's 1%. It's not a big deal. It's a big deal if it's $1,000, 10%, right? Or $4,000. Really bad if it's $40,000, right? But you see what I'm saying? So proper risk management is the beginning and the end of your trading. It's the end all be all of it. SPX or FTX, right? Caroline there talking about how you guys have seen that interview, I'm pretty sure, right? Where she says, oh, well, we don't use stop losses. Yeah. How'd that work out for you? But seriously, see what I'm talking about, guys? So yeah, Hank wants to be back on the beach in Asia. You think victim culture is a very U.S. specific problem too? Oh no, it is heavy here in the U.S., but it's a lot of places in the world. Anywhere where you have the government stepping in and taking care of you more, you're going to see the problem. Because it's the idea that people aren't taking care of themselves, right? And so I'm not saying that it's a bad thing that, government gets involved in whatever, whatever it is, what it is. But I mean, the more that the government tries to insert itself in a person's life, the more likely you're going to see this. Because people are taught by government that they don't have to be self-sustaining. And so if you don't have to, then things aren't your fault. You have no control, right? It's up to everybody else, up to government, right? So yeah. Tao, what's up, man? Good to see you. But yeah, no, Hank, I definitely agree. It's a very, very big problem in the U.S. It is significantly a big problem here for sure. Anyway, guys, hey, listen, you can go here. I would love for you to do this. Not only do we have that other Cyber Week sale, but we have this one. So we're launching the mentorship program, okay? And you can get in on it over here at Cyber Monday. Just jump in there. You get a 70% discount, okay? And as a matter of fact, we've got a payment plan on there as well. So if you can't come up with the money up to begin with, that's fine. I've had some people already take us up on this payment plan. I am footing the bill for the payment plan myself. I was going to bring in another company, and I may still bring them in at some point, but I am not looking at your credit. I'm not looking at your job situation. I'm looking at anything. I'm looking at you saying, listen, I want to do this. I'm serious about it. I'm an action taker. And if you can do that, I'm willing to do the payment plan with you guys. Now, I know that's a big step that I'm taking on my part, because if you don't follow through, it costs me a lot of money to go through debt collection, all that kind of stuff, right? But anyway, money back guarantee and everything with that. Jump on it, guys. It's only good through the end of Sunday. So you need to get in there and do it. Everything that we're going to do is on there, but to recap real quick, you're actually going to learn my specific day trading system, the one that I use to do that. We're going to talk specifically as well about how to trade on the very small time frames. Some of you guys like to trade those or think you want to trade those very small time frames. I'm going to get you in the right mindset. I'm going to tell you the realities of it and the expectations of it and how to do it properly as compared to the longer time frames. I am releasing 2 books this in 2023, guys. 2 books. I'm writing them both right now. One is nearing completion here, but you're going to get digital copies of both of those. You're going to get access to Tier 3 for the year. You're going to get our workbook that's going to help you work through the emotional and psychological issues that you're having that are keeping you from being successful. And I'll tell you what, these are going to work not just for trading, but in life as well. I think that's a huge thing. What else are we doing? God, I don't even remember everything that's in that. Anyway, you guys have to check it out. We've got some more in there. And this is actually going to launch on the 28th of this month, okay? And so, I wanted to wait till after Christmas time, that whole holidays period, because, everybody's doing everything, bouncing around. Didn't want you thinking, oh my God, I have to show up for these things now, while I'm trying to do all that. There will be weekly sessions that we'll go through, meetings, as well, video chat kind of things with everybody. And you'll be able to ask all the questions you have and all that during that time as well. By the way, with Tier 3, you'll learn how to do Wyckoff, you'll learn how to do Elliott Wave, and then you'll learn price action concepts as well. We get 3 live streams every week, Mondays, Wednesdays, and Thursdays for an hour. But God, it's so much. It's crazy. It's absolutely crazy. But man, I'd love to have you guys there. All right. Let me see here. Let's see here. Yes, there's a payment plan. By the way, guys, there's an email address on there for the payment plan if that's something that you're interested in. Or heck, guys, if you want to do a Zoom call with me, freaking let me know. Send me an email as soon as possible, because again, this ends, the end of the day there on Sunday. I mean, we'll still be offering the program, but it won't be for the price it is now. It won't be for 70% off. But if you got questions you want me to answer personally, face to face kind of thing, let me know that you want to do a Zoom meeting. And I'll see what I can do about setting one up with you. Okay, we'll get it done. Let me see here. Ali, what's up, man? Yeah, man, I'm excited. I think you were the first one to jump in there, man. Ali was on that, right then. I love it. Where did I learn Wyckoff? I'm one of those people. Okay, so most people, especially when it comes to trading, they don't learn it through books. They have an inability to actually learn it and apply it properly through books and whatnot. I just happen to do that pretty well. So for me, it was through books, it was through videos, but it took a while. It does take longer. You can learn to trade. Most people can learn to trade on their own without somebody else helping them. They can. But it takes a really specific type of person, and most people are not ready to do that. But even if they are, you're still, like I did, you're still going to lose. You guys know me, man. First few years, man, I was losing money hand over fist, right? And you're going to lose a lot of money in the process, right? And so with what you do in life, the things you do in life, mentors are a great thing. For me personally, I have multiples right now, guys. I am paying over this for this what I'm currently in now through they're all year programs, right? I've got 3 mentors, okay? And I am between the 3 of them, I am paying $67,000 for the year. So when I offer this mentorship program, guys, with this, it's not because, oh, I'm just doing this money grab, whatever. It's because this is what I do in my life. If I want to learn something and learn it well and learn it as quick as possible for a lot less money than it would take trying to figure it out on my own, where I can miss all the mistakes and things that we generally do, I do that. So I've got 3 right now myself. Work on different parts of business and other things to help me become better at the things that I do. So yeah, it is a crazy. Learning by yourself is the worst way to learn. It is tough, guys. It is. Like I said, I excel at learning on my own. I like learning, but to me, once I really bought into this idea of mentors and whatever, I haven't stopped. Anything that I want to learn, how to do correctly and learn to do it as quickly as possible and learn to, do it in the best way possible, I get one. You got to think about it, guys. LeBron James, all these guys. I know football's on right now for you guys over there, watching it over there in the, what is it? It's over there in the UAE or something, right? Right now, FIFA Cup. And so, I know I don't, I'll be honest, I don't know a lot of players, but the people there, people that get to great levels in life, they have coaches, guys. They have mentors that work with them, right? You can't do it without it. Problem is, most people never recognize that. They understand that people have coaches and whatever, and they're doing all these great things, and they have them at these high levels, but they don't let that translate into their own lives and how that works for them. And so, again, I was the same way at first until I actually just finally gave in and let it happen, allowed it to believe it, and went out there and got my first coach. And I haven't stopped since. I'm 100% sold on it. Again, just kind of life, man. There's so much that you can do in life. And the more of it you try to do on your own, the less time you have to do more of those things. Does that make sense? So, yeah. Mark, you know what? Mark, you're already in Discord, buddy. You can go ahead and just send me a message there. You can do that. Be sure you guys jump on the page, though. Get through the entry page there, just to see everything that's included in there. Like I said, I'm going to add more. One of the things we did, I'm just starting to finish up, I'm finishing up our curriculum on prop trading. So if you guys don't know what prop trading is, basically you pay a fee to take a test. Make sure that they make sure that you can hit the profit levels they're looking for by still adhering to their drawdown requirements, right? And if you do that, then they award you an account, and you get to generally keep 90%, sometimes 70%. Depends on who you're with, but usually around 90% of your profit. So let's say you go in there, let's say you get a $100,000 account. Let's say you make $20,000 in profit that month. You get to keep $18,000. $2,000 goes to them. But they provide the money. They provide the account. So for those of you that say, listen, I don't have a lot of money, Chris. I've got $1,000. How am I possibly going to do it? And you're not willing to take the time, right, to do it correctly through time or whatever. But just take those same concepts that I teach, and you can apply them to that. Now, we actually go into it on how to apply them specifically to prop trading, because, again, prop trading is really all about the risk management. That's what it really is. And that's why most people fail those tests, right? But, man, that's what we're going to do. It's all part of this as well, so you guys are going to get to learn that as well. If you have a smaller account, maybe you wish you could trade with a $100,000 account. Maybe you feel like, man, if I could do that, I'm not so worried about these big, huge tries, and I can trade smaller targets and whatnot. And it's really the likelihood, right? Prop trading is a pretty crazy, profitable potential thing. And you can here's the thing, guys. If you figure out prop trading, you can get multiple prop trading accounts for multiple companies and just do the same trade across all of them. If you got a $100,000 account across 5 different companies and you're making, say, 20% in a month, 20,000, right? You're making 20,000 times 5. Guys, this happens all the time, but only to the people who actually understand how to trade properly And beyond that, understand how to do it in the way in which the prop trading company expects it to be done. So I don't know if you guys know about that, but that is something crazy out there, okay? And whether you go through me or not, I'm just telling you guys for your own thing, this is something that you can realistically do. It's not a scam. You just have to understand how to approach a prop trading account. It's different because it has the rules it has. You have to understand those rules and what they mean. So it's a bit different than trading your own account. But man, the potential for what you can do with it. Again, guys, just think you get a $100,000 account and you're only doing 10% a month, but you do that across multiple accounts. I mean, geez, even 10% on 100,000. How many of y'all out there are making 10 grand a month? How many of y'all out there would like to make 50 or more? You see what I'm saying? It's possible. I'm not guaranteeing you're going to be successful at it, but I will say that if you come in with an open mind and you listen and you apply and you practice correctly, your odds are significantly increased that you're going to. And again, that gets you from this whole idea of, I've only got a small account to, well, now I've got real profits that I can make, potentially. I love it. Teo says, when he started, he knew zero English. He watches a lot of YouTube just to learn English in words used in trading. That's awesome, man. I love that. Having grown up around the world, man, that is amazing. Here in the U.S., we tend to be very U.S.-centric. The rest of the world needs to learn English, right? But man, it's amazing when you go across different countries. My grandfather, we'll get into the charts here, guys. So I give you a thing on my grandfather here. He was from Ukraine. So that's why I've got more of a personal interest in what's going on with Ukraine and Russia right now and everything. But he was there back with the Russians and, World War II, Russia and Nazis and everything coming through all that. My great-grandparents, his parents, sent him off on a train at 16 years old and said, go, don't come back. Tried to save him. And, he ended up making it over here to the U.S. eventually, and had my mom, dad had me. So I'm here because of that. I mean, that's crazy, right? But he could speak 5 languages, I think, and then he could write in 7, something like that. Yeah, it was crazy because of where he was. Ukrainian, Czechoslovakian, Russian, German, English, all through that. So I have a lot of respect for people through other areas of the world because they often speak multiple languages and they're serious about wanting to learn it. So yeah. So anyway, okay, guys. Aaron Quinn, what's up, mate? Says, I speak on behalf of this industry. The amount of value and effort that you put into your trade and business is unmatched and is greatly... Oh, man, I appreciate that, man. Thank you. I didn't know where you were going with that, but I appreciate that. We tend to often only say the things when we're upset with somebody or frustrated with something, right? I'm the same way. If I deal with the company's poor customer service, I get really upset. I have to consciously make a decision to say something positive when there's a good experience. So I appreciate that you took the time to say that, man. I really do. Thank you. Hobby Downs, what's up, man? Killer show so far today. I appreciate that. Any chance you can dig into some precious metals charts? I am going to. Yeah. Gold and silver? Yeah. All right. Definitely, bud. That's right. That's you there. I forgot. Hobby Downs. That's right. All right, guys. Here we go. So I appreciate you guys sticking with me through this first bit. That went on a little bit longer than I planned. But again, guys, for me, it's those other things that I can do for you, even beyond trading, especially that really mean the difference to me. So here's what I'm looking at. Count-wise here, I think it's possible that we may have a 3-4 here. You can see that it pulled back to this 4-hour demand structure EQ right there, right between the 38.2 and the 51.6. So if this is correct, we need a breakout above 17.108.25 here on Coinbase. And that should signal that we're rallying up in wave 5 up here towards 17.650. Now, 17.650, guys, gets you just above that. This is the June low. It's also that large range support, right? It gets you right into this large 4-hour supply structure, right? So generally, we kind of look at this idea that we've got this 1-2 here, and we might be working on a 1-2 here, right? Now, this is going to give us an overextended wave 3, which is probably going to lead to another overextended wave 3. The importance of that being, let me find this chart here. Yes. The importance of that being this right here, right? So if we can get, this is the squigglies I drew. And so we're pretty close on it. I was all excited. We were perfect. Everybody dipped us a bit further. But the idea was basically we were going to rally up here where we did. We were going to pull back to this support, this wick area here, right? This 4-hour demand structure we already looked at, right? And then we're going to rally on up to the just above the June low. Pull back here. Pull back to the June low. Push out higher, right? Because the idea is that when I'm looking at this, let me see if I can turn down a lot of these these indicators here. I have them on there sometimes because I like to say things, and then the indicator says, "Look, this is what what he's saying there." Anyway, this right here on the daily here, this is that 200 EMA. Okay, it's not the 200 MA, it's 200 EMA on this chart. But the idea is, remember, we've been talking since day one, right? We've been talking about the idea that this is bearish market structure. It's a bearish market structure because you have a low, a high, a lower low, a lower high, and a lower low now. So if we break out above the last lower high, that's this 25,000 kind of area right here. If we break out above that, it's no longer bearish market structure. We've broken that bearish market structure. Now the problem is, for most traders out there, their earliest desire that they want to enter is going to be up here. But that means if you're not, let's say you didn't get down here like we did, right? And let's say you wait till that. That means you've already lost profits of over 60%, which is just exponentially increased on the way up, right? And that'll be minimum. But most people, even with that, they will convince themselves that they're still in a bear market. It's just a bear market bounce. And some more maybe will maybe start buying in around 50,000. But most are going to wait till they get up here to 60 to 70,000 before they enter. That's a lot of missed opportunity, right? But they call themselves traders, and they're really not trading. What they wanted to do was catch the bottom. Not even the bottom. They wanted to catch the lowest price, the event, right? They wanted to catch this here. But once the opportunity showed itself, they couldn't commit. They couldn't commit. And think about it, guys. How many times have you been sitting up here and said, well, I'm going to buy when it hits this level or when it hits that level? And then it gets down there and you're like, yeah, no, I'm not going to buy, right? We saw that with a lot of people over here, right? We saw it with a lot of people here. Oh, it's going to break down to 3,000. I'm going to buy there. 3,200, 3,500, right? They never bought. They bought. And then they convinced themselves, as we went through, remember we talked about this, and if you were with us at the time, we talked about it extensively, right? And we talked about how they kept talking about these real lows. And I said, yeah, it's possible, but man, oh man, this looks like we're probably done. And we're going to break out through 4,000 here, right? And everybody's like, oh no, we're going to hit the 4,000, we're going to drop lower. And it didn't. Sailed right through it, right? And then they were scared to buy. And then it went, because they were scared to buy because it rallied up pretty quickly through it. Now it's almost 5,000. They're like, oh man, it's definitely going to get busted here at 6,000 and fly lower, right? And we said, no, it's going to rally right up through. And it did, right? And then retest and continue higher. And they kept being scared to enter. They missed all this opportunity to enter and finally got up here, right? How do we know that they entered up here? Because look at that volume. They're being sold into at the very top. That's when they entered. Look at the volume on the way up. Nothing. You had a little bit right here, right? A little bit right here. You had a little bit up here, right? So again, you have some people will jump in on the first break. Some more people, a little bit more, will jump in on the second break. But the majority of people will jump in at the top. You cannot get this volume at the top unless you have people buying what you're selling. Remember, volume is not buying volume or selling volume. It is the interaction, right? It is the sale and subsequent purchase, right? You need to have a buyer and a seller to move product, right? Guys, I sound like a drug dealer here. But seriously, you gotta have a buyer and a seller. You can't just buy, there's nothing to sell, right? You can't just sell if there's nobody to buy, right? So when you see volume spiking like this up at the top, it's telling you got a lot of people buying in right here. There, right? These 2 days, guys, look at how much volume you have. This is where everybody bought. How'd that work out for them? You're going to see the same thing over here, guys. Okay? You can see the same thing here. You're going to have some people buy on the breakout here. You're going to have a few more, maybe here and here. But your big group of people are going to be up here. And they missed all that. Okay? So if you're a trader, understand you're a trader. Okay? Don't say I'm a trader and then be an investor. Okay? By the way, notice where these are lining up. I drew these without the pivots and everything. And then kind of, I drew it on that shorter time frame, on that 1 hour or 4 hour, whatever there. And then I popped it up, and you'll notice it hits right where, look at this. So we rallied up to ends up being the daily pivot. Just above it, right? That's that target. Pulls back, of course, to the support here, rallies up into the next one right there, which is just nothing other than the support here, right? Makes a lot of sense. So if I'm looking at this, I think there's a good possibility this is what we're going to do, right? You can see this is the 4 hour here, Stochk RSI. You can see it resetting down here and oversold. It's starting to curl a bit. We want to see a bullish cross and bullish breakout. 1 hour is trying to do its thing, but may or may not be done, right? So if we're looking for further decline, I got another chart. I'm sorry. Let me see here. Further decline will give us the 50% here, right? Now, if we're breaking through the 50%, then this orange range is what I'm interested in. This orange range right here is 16.5 to 16.650. If we get to this area, I think what we have is wave 1 is actually complete up here, and this will be wave 2. Honestly, I like that count a little bit better because it sets up better on this move out. Okay? We want to see a wave 3 on the breakout of this movement here, right? Or, a wave 2, right? And so it could be a wave 2, right? So if we look at this, we go 1, 2. If we can get a rally... See, here's the problem. If this is 1 up here, problem with this potentially being 1 right here, let's say up here, right? 2 is going to pull back to wave 4 here, right? Wave 3 will break out. It will pull back for wave 4, and then wave 5 up here. So then 3 would have to be up here. Now, I guess it really isn't a problem because you're going to get your 3 up here. Your 4 should pull back to retest this as support. 5 should break up higher. By the way, guys, during that coaching, these kind of concepts, the way in which Elliott wave interacts with pivots, things like that nobody else teaches, are going to be things that you're going to learn to a great degree in that as well. Basically think of it as a brain dump from me, the things I've learned over the last 27 years, and trying to get into you over the course of the next year. So, but yeah, it isn't terrible that we might do that. It just means we'll have a greatly overextended wave circle 3 here. So if we were to hit, say, like this up here is wave 3, right? Wave circle 3. That's just above the 2618 extension. So, I guess I could see that, sure. See a nice overextension here. But that would, and it would be kind of what if we think about it, it would be kind of what I would expect. Remember we were talking last time about the fact that, this looks like accumulation here, but if it is, wave E or phase E is taking a long time, and we were right around over here, I guess it was. And I said we really need to, as a matter of fact, it was Tuesday, right? Yeah, right here. And I said we need to see a nice impulsive move quick that breaks out above the range here to get going into phase E, right? Because phase A is the stopping phase, phase B is building of a cause, phase C is your final test of the lows, phase D is your interior markup, and phase E is your exterior markup, right? But I said we were going to need that, right? And so it was like, what was this? It was later that day, guys, that we got this rally up through here, right? So we got exactly what we need. So phase E or phase D should be done here. And this is phase E that should be rallying up higher. So again, a lot of possibility in this move, right? It just means that this wave circle 3 overextends toward the 2618 extension, right? And again, that would then lead to a larger wave, it'll be this Roman numeral, right? So that would be all 1, we'll get a 2, and then wave numeral 3 heading up will probably be overextended as well. But this is what you usually expect, right? Now, some people talk about the fact that we need, that bottoms aren't V-shaped, and they're correct. Generally, bottoms are going to be more played out, right? Again, it's this idea you have capitulation into it, people are scared to get in, and so it takes a while going sideways as your bigger players accumulate before rallying up, right? But the problem with most of those is that they consider that this is the bottom here. Guys, this is the event. This would be the bottom here. If this is the low here, this is the bottom starting back in June. This is the range here, right? So what this becomes here with that significant volume here on Coinbase is it becomes a terminal shakeout. And a terminal shakeout most of the time will create a small local range for the same reason that you create a range here on your other capitulation, right? Your big range. People get scared. They want to get in. It takes a while to kind of, because the reasoning for the terminal shakeout is to get all that money, all that whatever's remaining loose out there into your hands. That way, price can rally without all that supply coming in on it, right? So that's the concept here. The idea is that we push out. Now, zooming out, what are you looking for? If I'm losing you and all that, you're looking for an impulsive breakout above the daily pivot. Impulsive means large candle spread, large spike of volume. You want to see that through the pivot. If you can do that, your next general target should be that daily R1 pivot. And the idea here is that we'll rally up there, we'll pull back toward the pivot, and then we'll break out higher again. And so in terms of this range, phase A is your stopping phase. Phase B is your building of a cause. Phase C is your final test of the lows, in this case, terminal shakeout. Phase D is going to be that interior markup. Phase E will be the exterior markup. This movement up through here should generally be quite a bit faster than this movement here. This movement here is what determines how large that breakout, how impulsive that breakout is going to be. Right? So this is pretty long here. This is, again, phase B starts here right around the end of June and goes all the way over here till the beginning of November. July, August, September, October. It's 4 months. So we should expect more. So we're going to see if we can get that. We're going to see if we follow through. Like I said, easiest thing for you guys to do is to just look for an impulsive breakout above that daily pivot. If you can do that and then pull back and then go higher, that's even better. But generally, we'd expect an impulsive breakout there. And if we get that, we look for a rally up toward this R1 pivot area. We look for a pullback toward the pivot area. And then we look for a breakout higher. If you can get that movement, there is little to no reason you should not be in, guys. Don't wait until it gets to 50,000, 60,000, 70,000. I understand if you want to wait to see that happen. I understand that's fine. If you're not already in from down here, right? Because traders, right? Trading smaller time frames. But if you get this breakout here that rallies toward the R1, pulls back to the pivot, and then breaks out higher once more, there's absolutely no reason you shouldn't be getting in there and thinking that it's probably going toward that all-time high. Now, will it get there or not? I mean, there's things that could happen. It might not. But at least you're going to be in for a rally up to probably, 40, 50,000, 55,000 maybe even, at least. Rather than waiting till that area to get in and go up. Right? Remember, trading is about action, guys. Okay? You can't just sit here and be concerned all the time that, oh my God, it's not going to work out, or maybe it's not, or I've got this paralysis here. If that's the case, take a smaller position. But you need to get into trades when they show themselves. Okay? Let me see here. I honestly missed the tension of trading to pay the bills, even though it was always a side hustle. One of the greatest, I think I posted this as well, guys, on Twitter there, by an unknown author. But it was, what was it here? It's in a picture. Let me see here real quick. Let me scroll. It is fruitless to wish, oh wait, no. Well, this is a good one. It's fruitless to wish you had started years ago. In the future, you will wish you had started today. You guys, you're probably living that truth, right? In different areas of life, maybe even, right? The problem is we always put it off. We always put it off, and then it goes on. Think of the chart, guys, right? This is the exact visual of this thing. It is fruitless to wish you had started years ago. In the future, you wish you had started today. If you're not, most people are not going to get in right here, right? Like I said, they're going to get up here. It's 60,000, 70,000, right? And then they're going to wish they had gotten in down here. Many people haven't even got in yet. They wish they had gotten in here. They wish they had gotten in here. They wish they had gotten in here, right? Have you guys felt that in your trading? Oh, Mark, you're living that truly about wishing you got into something? Yeah. I mean, it's human beings. It's what we do, guys. The goal is to notice that and then to change it. You can't change that which you refuse to accept. Let me repeat that. You cannot change that which you refuse to accept. All right? Now, the other thing, I forgot what I was talking about there. Maybe one of you guys can tell me, and then I'll tell you what I was going to say about it. But yeah, so I mean, again, life is what you is what you put into it, right? There's no guarantee you're at least going to get what you put into it, but there's a guarantee that you won't get it if you don't put something into it, right? You can sit there all day and say, man, I don't know if this is going to pan out for me. Well, as long as you don't do it, it'll never pan out for you, right? But as long as you jump in there and you give action and you do it, at least you've got the possibility and the likelihood that it will. See what I'm saying, guys? Don't suffer from the coulda, shoulda, wouldas. That's right. That's right. Oh, yeah, look at Hank. If I ever get the chance to buy Bitcoin below 20,000, I will sell my house. Was heard so many times during the bull run. They all poop their pants now. Exactly. And, that isn't to make, I don't say that to make fun of anybody, guys. I say that because I'm trying to get you to understand. The trading psychology is what I do, okay? I have 27 years experience doing this, trading. I have a master's degree in applied economic psychology, among other ones, right? This is what I do. And so what I'm trying to do, I'm not saying things like this to make people feel bad or to make them feel less aware. I do it so that you guys understand that these things are happening, so that you recognize them. Because as I said a minute ago, you can't change anything that you don't accept has happened. This is that whole victim mentality, right? This is this whole, I don't have to take responsibility for it because it's somebody else's fault. And as long as you will notice, maybe yourself, or at least maybe you've seen it others, when they don't take responsibility for it, they believe it's somebody else's problem, they're always stuck in that. It always comes back to, remember when that happened? Oh, they've never taken care of this. They've never apologized. They've never, whatever. Always somebody never did. And they stay stuck in that. You can't get out of that. You have to accept your part in whatever it is that happened, the decisions you made that led you to get to that position. It doesn't mean that you are completely at fault. It just means that, listen, you made decisions in your life that got to that point. So forgive yourself. It's okay. You didn't know. It's fine. Forgive yourself. Accept that happened so that you can now learn from it and move on. It's an absolute must for trading, guys. There is a reason 90+% of new traders are out in the first 90 days. 95%, I think it is. In the first 90 days, guys, they lost everything. There is a reason for that. It's not just some thing that happens. There's a reason. And there's a reason I tell you guys that when you come into trading, that you're thinking this way. I know because I was there. I know because I've talked to so many thousands of traders over the last 25 plus years. And they're almost exclusively all thought the same thing when they came in. We all think the same way. We all make the same mistakes. We all lose money the stupid way. That's okay. You're not special. I know in a world today where everybody wants to be special little snowflakes, that hurts their feelings, right? But this is good. The good thing is you're not special. You've made the same mistakes that everybody makes. So you can say, wow, I'm just doing what everybody else does. And you recognize that you did it, and now you can forgive yourself, and you can say, now how do I do it correctly? And you can move on, and now you've got a chance of being successful. If you can't do that, you are not going to be successful as a trader, I promise you. Okay? Yeah, don't sell your house. Don't sell your house for trading. It's just stupid, guys. Can I show you how I get 5 waves down from the August 15th high to the 15.4 low on November? Yeah, this is the crazy one. So what I'm looking at here, I think you're talking for this high up here, right? Yeah. Oh, no, you said August. Looking up here, right? Yeah, up here, okay. I'm looking at this as an ending diagonal here. Basically, it's an ABC, right? So 1, 2, and then an ABC is 3, 4 with the triangle. And I have 5 labeled here, but that's an AB and then 5 for C here. There's a couple of different ways to label the ABC here, but basically the idea is this is an ending diagonal right here. So 1, 2, 3, 4, 5 there. That's how I've got that counted. Now, we haven't broken out about above what would be, well, actually we have. See, if the count's correct, then the breakout above triangle resistance here at wave 4, which we've done, signals that wave 5 is done. So we should be done with this. But as always, you want to watch your swing highs. You want to get above those swing highs. Again, this is why this is the area, the mid. Let me see. Let me kind of pull this over. There we go. This right here, it's like around 25,000. What is this? 25,215 basically. That's why this is so important. That's the last lower high. Oops. That's the last lower high on the downtrend, on that bearish decline. And so breaking above it means that bearish market structure is broken. And it's bullish market structure off that low there. It also just so happens to be wave 3, wave 4, wave 5. So it's wave 4, right? So again, when you're counting waves and you break back through wave 4, that says, hey, guess what? Wave 5 should be done now. So if the count is correct, then we should be on our way up, if it's correct. But we can't just assume it's correct, right? Because I'm going to tell you what, this is crazy freaking price action here. And so there's a chance this may not be a correct count. But we're watching locally here, what I was talking about locally here, because that sets up the stage to potentially move up through that. That's the importance there, okay? Didn't know you could have a triangle for 4 and a diagonal? Yeah, sure. Yeah. You can have flats. Yeah. The only thing is, if it's an ending diagonal, it has to be an ABC, right? It has to be a 3, 3, 3, 3, 3 market structure, right? So basically, all corrective is what that means, right? If it's a leading diagonal, it can be all corrective, or it can be our normal 5, 3, 5, 3, 5 kind of thing, right? But I don't know. That to me seems like the easiest count. I don't know. Maybe one of y'all can get some different count here that gets you maybe 5 down without overlap. It's a tough. I'm gonna be honest, guys. It's a tough count here. I've struggled through this. Those of you who've been following, we've struggled through this, trying to figure out what this may be. But all that overlap most often means it's some sort of overall corrective movement, right? And so, it is what it is. Maybe it's not, right? So maybe this is one. Maybe this is a running flat here. Maybe this is 1, and this is ABC for A, ABC for B, or WXY, right? And then maybe this is 1, 2, 3, 4, 5 here. So maybe ABC is 1, 2, ABC is 3, 4, ABC is 5 as an ending diagonal for wave C, but it doesn't actually reach wave 2 up here. So, it stops right about there, which would make it a running flat. And since wave 4 triangle would end down here, well, heck, you got a 1, running flat is a 2, you got a 3, you got 4 as a triangle, you got a 5. So look at that. You asked that question, and I didn't even consider that before. So quite possibly, that could be what's going on there. So wave 2 would actually end here as a running flat rather than up here. Not a big deal either way, because if it is the count I have as it sits, or if it is that potential other count there, and either way, 5 is done, right? Now, why would 5 be done here? Well, first of all, we're looking at this as being a triangle here, right? And out of a triangle is usually a thrust, right? This is thrusting movement here. Now, a triangle just has to print 5. A triangle cannot, by the way, guys, pay attention here. A triangle, wave 5 out of a wave 4 triangle, has to break down below wave 3. It cannot stop short. You guys hear about truncated fifth waves and whatever? A fifth wave cannot be truncated after a triangle. It has to break down below wave 3. But all it has to do is print 5 waves down below wave 3. So again, quite possible, move back up. And then in terms of what we got here, looks like a spring. Secondary test of the spring, show of strength, last point of support. And then you have this right here, which is the big volume spike, the big candle, which is your jump across the creek. The creek is, let me see here, I got my other chart. The creek is nothing other than the, do I have it drawn on this one? The creek is nothing other than the supply resistance, right? And where is it? We know it's here. Why? Because this is where all the swing highs are there, right? That's why I've got this blue line on some of those charts I've posted you guys have seen. So the big volume, big price action coming out through that says that's probably the jump across the creek, probably the back up the edge of the creek. We're rally up higher now. So, you know, what we're looking at, right? Let me see here. Yeah, one more down wouldn't invalidate the count, but it would invalidate the structure here and the structure here, which makes it quite potentially not realistic as a low, because then all of a sudden your low starts looking like, let's zoom out here to the weekly. Oh, I'm going to show you guys something else here real quick. Then your low starts looking like a V shape, right? If you come down one more, you should get a strong move back up. But nonetheless, here's something I wanted to show you. Here's something I posted there online at one point. Discussion with my friend there, John Wick. You guys may know him on there, right? He's a very loud bear right now, but we're friends, right? Even though we don't necessarily agree. And that's the way it should be. Look at how often Hank has disagreed with me. Low 80s for DXY. Won't say anything about that. Just kidding, man. But seriously, guys, just because somebody doesn't agree with you doesn't mean they're an idiot. It doesn't mean that they're stupid or that you can't be friends with them. Jeez. But here's one thing I noticed. On the weekly, you see this large bit of volume, and you see this large bit of volume here. So the volume in this candle was 336.574K, right? The volume this one, 432.341K, right? Significantly more volume, right? The candle spread, the size of the body of the candle, was $6,000 in this one and only $4,600 in this one. What does that tell you? That tells you, the volume tells you there's significantly more effort, right? That changed from 336.5 to 432. A lot more effort, right? The size of the candle spread tells you much less result, right? You went down from 6,000 to 4,600. 25% less result on significantly more volume. I don't even know how much more volume that is, guys. You got to do the math for me real quick? Going from 336.5 to 432, that's what? 3, 6, 9, 12. I mean, it's almost 100,000, just around 100,000. So almost a third, right? So almost like 33% more volume, but 25% less result, right? You guys see that? And of course, we have the bullish divergence in RSI. We have Stoke RSI, deep here, resetted oversold, threatening to cross bullishly and break out of oversold, right? Now, let me give you something else. Look at the monthly. Look what happened on the monthly here. So this previous one here is 19,000. You can look at right here. Oh, I'm sorry, right here, right? It's $11,798, almost $11,800 for this monthly candle spread right here for Wednesday, right? I'm sorry, Wednesday. For June, right? That was that June capitulation, right? Volume right there, where's my volume right here, is 789.887. So basically 790,000, right? Okay. Look what happened here last month. The candle spread, we went from, remember, it's this number right here. We went from 11,800 basically to this one's only $3,300. Basically a quarter, a little bit more than a quarter of what it was here. But volume-wise, again, we went from 790,000 basically to 1.10 million in volume. So we increased volume. Whoops, there we go. We increased volume almost what? Almost 25%? 25%? And decreased, so that much more effort, our result was just 25%. Significantly more effort, incredibly significantly even more less result. When you're getting to bottoms in structure, and many of y'all are not even paying attention to what I'm saying right now, it's just glossing over, and this is one of the most important things you can learn about structure and about bottoming and topping, right? This is what we look for when we look for a potential bottom. Now, does that mean that it can't drop a little bit lower? No, it doesn't. But when you get this kind of disconnect over this large period of time here, that means they kept trying, and they got so bad. So much more effort and just absolutely almost nothing to show for it. Demand is there. Demand is buying it up. That's a good indication. It very well might likely be a low, especially after we've already been going down for a year. Guys, we topped out here in November of 21. This is November of 22. This is 1 year later exactly. So we've been trending down for a year. And between June and November, we get those two differences there. So, do what you need to do, think what you need to think. But I'll tell you what, if you are not paying attention to that, what the heck are you doing as a trader? Right? What are you doing? Again, that doesn't guarantee, there are no guarantees in trading, right? But this is the type of indication. These are the things we look for if we're looking for a bottom. We're looking for excessive more effort as we get to that low without a corresponding increase in candle spread, in result. You see them applying a whole lot more. They're selling a ton more, but they're not even close to getting what they got previously in terms of result. That means somebody's up there sucking all that up. And the only person that sucks it up on such a short time frame, again, you can look at it here on the daily or the 4 hour, whatever, are your big players. Retail does not call up each other. Hey, John, this is Fred. Get Jerry and Ann and Julie all together and let's all go buy at this price. That isn't what's going on. But your big players control a lot more, right? A lot more money or a lot more Bitcoin, right? And so in this case, at these lows, they can absorb all that retail, that individual retail selling, because they control more of that right there to suck it up there, right? Does that make sense, guys? Man, I hope that makes sense. That's right. It's not a disagreement out of principle. That's right, Hank. Exactly, man. Exactly. Any thoughts on the Bitcoin Weekly 250 MA to crossover? I haven't even looked at it. I don't look a whole lot at them. Let me see if I've got them on here. There's the 50 in blue. I'll pop this over to the weekly in a minute. That should be the 200 in red. No, it's oh wait. There we go. Yeah, that's 200 red. Okay. So I've already got them on here. Oh, yeah. Yeah, obviously positive, right? Now, here's the thing about crosses, guys. Again, pay attention, all right? Here's the thing. In this case, if this drops down, right, if it were to cross with this being nearby, right? So, let's say this, if this is going to fall further, this is going to pull further, and it's going to cross closer down, right? If that is to happen where it's close by price, it means that thing has probably happened. So in this case, you're looking at the 50 should be blue here, right? Yep. And the 200 MA here on the weekly is red. Okay? And so the closer that the blue would be to cross down across the red, so the fast over the slow, the closer it does it to price, the more likely that the decline is done. So the bearish guy is like, oh no, bearish cross. Well, if bearish cross happens on the money, on the candle or near it, it means it's probably already played out, right? Which, why wouldn't it have been? We've been a year on the downtrend, right? Same thing with the opposite, right? So if you were to have the 50 cross over the 200, right, above it, the closer it happens to price, the more likelihood there is that the rally, the golden cross, the rally that you look for has already happened. The further away these things happen from price, the more likely they are to still have some juice left in them, right? So like if we were to jump here, say to the daily, right? This is a great one. Look at this. So the daily, we've got the 50 under the 200, right? We're pretty close here. So if we can get this 50 to cross over the 200 with price right around that same area, that means likely that we are now going to see some rally up with it, right? Because it's happening on it. If it happened, say, way up here, it would mean this rally's probably done. It's going to fall further. But the closer it happens to price action, the more likely it is to play out as you would expect. You know, the daily looking pretty close there. Okay? So again, people talk about crosses, but they don't understand what that actually means. Guys, this is what you get. This is what you get with TWC, okay? This is what you get with me. You get this in spades. You don't just get a bullish cross or a bearish cross, a golden cross or a bearish cross that's happening. I explained to you, what does it actually mean? And what does it mean depending on where it happens? This stuff you don't get this stuff from other people, guys. People want to complain, oh yeah, whatever, scam, blah, blah, blah. Usually people say scam are the ones that haven't even been a part of it. Can I guarantee that you're going to be successful? No, I can't. Why? Because part of when we teach trading, it's all that stuff I talked about earlier. You have to accept, you have to be open to listen, you have to learn, you have to practice properly, you have to apply the rules consistently. So there's a whole bunch on you as a trader to actually follow through with it. So there is no guarantee, right, that you're going to be successful. But like with the mentorship program, I believe that the system I teach, the only way you're not going to be successful using that system is if you don't actually follow the rules. And I firmly believe that. And if it happens that you actually follow the rules and you're not successful, you don't reach what we're talking about there, I'm going to give you your money back. Because I don't want you. But along the way, guess what? You're going to get all that other stuff along the way. You're going to learn everything you want to know about Elliott Wave and about Wyckoff and how it all interacts and about pivots and about how to trade successfully a prop trader account. You get the 2 books. I mean, you get all this stuff, even though you're going to get your money back. I mean, I think that's the disconnect for most people, right? Again, if you're out there yelling at somebody about something that you've never purchased from them and you're talking crap about it, you're just a victim. I can see it. All of y'all can see that now, right? It's life. It is what it is. I'm not going to spend all day yelling back and forth. It's stupid, right? And then you got these idiots that come on here and post all these stupid, what do you call them? All those get lucky kind of things, right? Guys, I'm going to tell you what right now. Don't ever follow these links that these bots put on these chats or put in the responses. If you do, you're most likely these days, especially if they're doing it on a crypto, somebody talks about crypto, most likely you're going to lose your, they've got a phishing site and you're going to lose access to your wallet. They're going to get all your stuff. So don't do that, guys, okay? Please don't. I don't care how hard up you are for, what is this one? New AI dating for all tastes and ages. Yeah, I mean, I don't care that maybe you think that's going to help you find somebody. It's not. It's not, guys. And most likely they're probably going to hijack your wallet. So don't do that, okay? All right, guys, listen, I have really kind of spent a lot of time here talking about being better and the things that you need psychologically to be a successful trader here. But let's go ahead and jump on some charts here. Ethereum, same idea. You see the same basic structure as what you have on Bitcoin, right? You have this same bit of supply here. You have the same kind of large candle spread, large volume breakout. So again, looking at the idea that this is, but your sideways here was not as long as Bitcoin, right? But you're looking at this as a jump across the creek. And then, so we should be looking, if it comes back, it should be finding support in this area. But ultimately, even if it does that, looking for it to continue rally higher there, right? So you got wave A, your stopping phase, or phase A, your stopping phase, phase B, building of a cause, phase C, your final test of the lows, phase E, your interior markup, phase D, your interior markup, phase E. I can do alphabet really. Your exterior markup here. So again, looks good off those lows there. But notice, again, it didn't drop to a new low like Bitcoin did, right? But nonetheless, locally here, it's looking pretty good. You want to get a breakout above this swing high here. This is really kind of your next big goal, is this $1,600 area. You can throw on some descending resistance here. It won't get you there a whole lot earlier, but if you're breaking out impulsively above this, you see where you're likely to do it? Here over the next week or so, potentially. And that'll get you through that and the high volume node, the horizontal. So here's another thing. Pay attention, guys. When you have diagonal and horizontal resistance in the same area, confluence, and you break out impulsively through that, the odds are significantly likely that that bottom's in there and you're rallying higher. When you have that confluence of the diagonal and the horizontal resistance at the same place, on the especially on these larger time frames, you break through that impulsively, so you get above both of them, yeah, the odds are significant that your low is in and you're heading up higher. Where else can you date robots? Wouldn't this be a triangle 4 and truncated fifth? No, you can't have a truncated fifth after a triangle. Okay? So, I don't know how you're going to count this here. So you have 5 up, right? And then you've probably got, I don't know, this like on the other one, this could potentially be 1, 2, 1, and then ABC is A, ABC is B, and 5 up here is C, as a sort of running flat, similar to the bigger structure there on Bitcoin, quite possibly, if I was to look at that real quick. Let me see here. And I don't think the low hit a new low, did it? That's why you're talking about truncated fifth here, right? 1073, 1071 here, right? Yeah. So, it's possible maybe this is 1, 2, 3, 4, 5, right? So there's A, there's B, here's C. Right here could be a flat if you were talking about right here. So I'm going to have to guess here because I got to get out of here. I want to get some more charts in real quick, though. Looking at this with this big move up here, it's possibly 1, 2, 3, 4, 5 here. And then we get, what we got here? I guess you could potentially be like, maybe like a ABC here as A, and then A, B, C, D, E as a triangle for B, and then A, B, C here. So you get a W, X as a triangle, and a Y is what it would be. Quite possible there. Or maybe even, like I said, maybe even this is just some large flat. Maybe this is 1, and this is A, this is B, and this is 5 down here for C. Okay? Similar maybe to the, on Bitcoin, that would be after we had the drop in April, April, May. Is that the one I'm looking for? Yeah. Remember, this was a 1 and then an A, B, C as a large flat. That flat almost came down below the swing low there. Then we rallied. Remember, I was talking about that. I said, it could potentially go lower. I said, but this really looks like a flat for me. And as long as this holds here, we should be looking for a breakout higher. Remember, I did that here on live stream. So yeah. I think there's possibility in that. Let me see here. Bitcoin wanting to push up a little bit. Trying to get a little excitable here. Oh, gosh, I got to get some charts here, guys. Let me see here. Load. Let's look at gold here real quick. Now, I mentioned this a few times. I'll give you some thoughts here. Locally here, I've got 5 down off the top with an ending diagonal here. Now, so it's possible 1, and then looking at ABC, this 1891.50, at that point, wave C will equal wave A. So we can still look at it potentially as what's going on here. But I've talked to you guys before that it looks like, this is some pretty significant rally here, right? I'm going to get stuff out of the way here. We haven't topped out here at the Stochastic RSI on the weekly yet. But so this is a pretty good move up here, right? And so it is possible, I've been talking about this since day one over here, that maybe this is 3 and this is, or or this is 3 up here, rather than being the top of a large flat that's going down below 1,000, right? That this could be coming off the lows, maybe 3, and then this is ABC. Well, this would have to be ABC down, which it's got a crazy count. There is an ABC that you could potentially get out of this. So that would have to be ABC, and then ABC up, and then 5 down here is a flat here for wave 4. Wave 5 runs up to around 23.5. So if you guys will remember, I talked about the idea that even when we were over here, I said if we break out higher, we're likely hitting to that 2,300, 23.5 area, 2,300, 2,350. Based on this right here, if this is an A, B, C as a flat for wave 4, wave 5 is going to target that area. But then guess what? Then you got a big move from 23.5, potentially even higher, all the way back down here, probably to around 1,600. Because if that's 1, wave 2 should pull back to wave 4 to the lesser degree. Initially, it could actually drop further. So, I mean, that's where I'm kind of looking at here. My thing right now is, we're in the last month of this weekly pivot. There'll be new weekly pivots in January. But, man, here we are popping up to it. If we can break out impulsively above that, here's the range, guys. I mean, all of a sudden, it's looking like something, right? Now, yeah, that'll be fine. Because you don't have this dropping down below the swing low here before it rallies up. So sometimes on distribution, people have like their, you get your buying climax up here, and then you come down to your automatic reaction, and you rally up, right? And then it pulls down and breaks lower, and I think there's a chart out there that says that's like a minor show of weakness or something, and then it breaks out higher to give you like a, and this one didn't actually though. So I guess it would have been, but just to finish my thought here, they'll see this breakout above the buying climax, and they'll say, "Oh, look, it's a after distribution, right? It's a thrust up there after distribution." But you don't get that. Your swing low should hold if you get that thrust after distribution there, and then break down lower. But in this case, it doesn't break down lower, and it actually doesn't break out higher here. So we'll have to see how this plays out here. But yeah, I mean, if we're getting some continued impulsive breakout here above this weekly pivot, things start looking kind of crazy. And, we're looking for this being maybe a 1, 2, and a 3, right? So where would 3 be? We showed you where 100% would be. 1618 is a 3, right? So if this is a 1, 2, 3 is up here at 2,000. 5 is up here just prior to the swing high again at 2,066. Now, if we get that, people are going to scream, "Oh, look, it's a triple top. It's going down." But what'll probably happen is it'll just pull back toward those range highs over there. Potentially this area here. So you get up here, pull back, then break out higher, if it is to do that. And things get interesting then we could potentially even see more than a 23.5. But as I've continued to say, even though I have my thoughts about lower, I am still open to the idea that the possibility that maybe we've got that one other breakout higher. But I think if we do, this is wave 4 is a flat, and we just have wave 5 up. So yeah, okay. Let me see here. DXY giving up the ghost right now. Thank you for bringing up the DXY. Let's see what we got here. Oh, yeah, look at that. Knee-jerk reaction. So this happened off the news this morning, off the jobs thing. But as you can see, it's just an ABC. So if you break down below this swing low here at 104.414, if you break down below that, that locks that in as 3 waves up. Wave 5 has an expected target based on the height of wave 4 there of 103.672. You can see if we do 1, 2 here, and then we go 1, 2, 3, 4, 5. 1, 2, 1, 2, 3, 4, 5. 3, 4. Oh, that's not even 3. Oh, wait a minute. Let me see. So this would be 1, 2. Oh, that wouldn't even be wave 3 there. We'd be coming down lower. So I'm gonna have to change this. I ran out of degrees lower to go, But basically what I was looking at is this is a 1-2, and then this is 5 waves down. So this is a 1-2, and this is 1, 2, 3, 4 is a triangle, 5 down. So actually this wave 5 would only actually be wave 3. Ah. All right. So then that means if you're in Discord, guys, and you got that DXY update, I'll update that here today. So you guys will get this. Let me see here. Yeah. So then wave 4 should rally back up to this area here, which gives us then, does it come in with it? Oh, look at that. Right there around the wave 3 area. All right. So let me go ahead and change this now. Now I can get in my lower degree. 3, 4, 5. Ah, man. Okay. All right, I got to change the way I do this. I got to remember how. See, this is the problem when you're writing it out, you forget. Okay. 3, 4, 5. So this is 1, 2, 3. That's what it is. Okay. Yeah. So this is 1. This is 2. This is 3. This is 4. This will be 5 here. There we go. So hey, if you're in Discord tier 2, tier 3, and you're seeing this happening right now, you know I'm going to be updating the intraday chart there later today. But this is the count we should be looking at now. And then that gets us down here at around 102.66 and a half kind of area, which is about where we were already looking for wave circle 3 to be. So fantastic. That move that works there. Actually, it doesn't. Because wave 4 can't be rallying back up into wave 2 in wave 3. Wave 3 has to be a motive wave, right? It can't be corrective. All right, well, hey. Well, I guess we can probably look at this then as a 1. I'm sorry, guys. Look at this afterward instead of as I was doing it there. But I guess we'll just look at this as 1, 2. That'll give us an overextension to the downside. I mean, that would make sense. We're looking at Bitcoin to overextend to the upside, right? 1, 2, 3, 4. 3, 4, 5, yeah. And then 1, 2, 3, triangle, 4, 5. Gets us there. If anything, at least you guys get to see the process that you go through here to figure out what's you know, when you screw up or what to be looking at there, right? 107, 195. All right. So it made it almost 50%. Almost 50% there. We're still looking for the same breakdown through wave B down here at the bottom to confirm that that's done. But yeah, man, there we go. Looking for this. So we should have like a 1, 2, probably a 3, 4, and a 5. So we should get an interior 1 here. Rallies back up as a 2, and then 3 breaking down. But ultimately, I hope you guys get a lot out of this when I have to go back and correct and change and whatnot. 101.03. Yeah, 103.5, right about that area. We'll get us 3 here. That's going to make our wave circle 3 really overextend lower. So this is what I'm going with at the moment, unless something else happens, unless we break out above wave 2 there, or something other happens along the way. So that's the way I'm looking at it. So what does this mean, guys? This means this move down should give risk assets a move up. So stocks, Bitcoin, stuff like that, okay? Fiboswani says 102.68 is a buy target for him. Let's see here. That gets you pretty close to where I'm at, within 1 point, right? That quick trade was beautiful this morning. It was, right? But, you know, again, this is minimum expected wave 3. You know, it doesn't necessarily have to get exactly there, or it could get further. This would be a heck of a overextension there. But it's the only way it makes sense here, right? So 1, 2, and then 1, 2, 3, 4, 5. No overlap, right? So it's 3, 4. And then 1, 2, 3, 4 is a triangle, and 5 is a thrust down just a little bit below the triangle. ABC up. And here we're coming back down, right? So, to me, that makes sense. That looks pretty legit there, and would kind of coincide again with the idea that that the Fed is going to give us a 50 instead of a 75 basis point rate hike in December, as well as, again, those bigger things we look at with the other risk assets, including like Bitcoin there. On the daily, we've still got room to continue falling here. We haven't even hit oversold in either one of Stochh RSI or RSI. You can see that we've got the S1 pivot here. Generally, let me see here. Get back in this lower time frame. All right. So if this is going to be a 1, 2, probably something around like this, right? 102.5 would give us potentially the wave 3. So it's pretty close there. It's almost what you were talking about there. Fiboswani. It gives you 1618 still below the S1 pivot. I mean, we could really, this is going to be 3 of 3 anyway. We've got 1, 2, 1, 2, 1, 2, 1, 2 kind of working on here, right? So wave 3 should be a big move down. So here's the thing. This 3 of 3 of 3 should be a very impulsive move down, okay? If that is, again, then that would potentially align with the idea of what I was talking about earlier. And, I had a different idea of what the count was, right? So it's nothing I've thought out. But now that I'm talking about it, when I talk about that expectation for Bitcoin here to rally up impulsively through here, that would make sense, right? That would be 1, 2, 1, 2, heading up. So it would be a 3 of a 3 of a 3 kind of thing pushing up. And you'd have a 3 of a 3 of a 3 kind of thing pushing down on the dollar, right? Does that make sense, guys? So there it is, aligning with what I was already talking about earlier, right? Let me see here. Is there a way to enable voice chat on tier 3 stuff so we can talk through things with you instead of just trying to top the things out all time while you look at it? I'll have to check on that. I know we use Discord. Adam is the real expert there with Discord. I know we have a talking channel, a speech channel, right? But is there a way for you just to send a voice message? I don't know. Somebody else got an answer there? Oh, you just got to save it on your phone or computer and then attach it as if it were a photo or video, etc. Okay, yeah. Because I usually get to the questions later in the day. If you have a chart request, usually comes at the end of the night. If it's after 5 o'clock my time, whatever, usually it's the next day. So it's just usually within that 24 hours, as long as I'm there and we're not a weekend or something. And then I try to get those the chart. I think you're talking about there on maybe the chart. Let me see here. What do we call it? The I can't remember what it's called. The channel's called right above chart request. What is it called there on tier 3? Chart. I'm sorry, guys. I don't even remember what the dang channel's called. I'm having trouble finding it at the moment there. Chart critiques. There we go. Maybe you're talking about on that. I still need you to put a chart, guys. Anytime you're asking me questions about a chart, I really need you to give me the chart with the areas that you're talking about highlighted so I can visually see what you're talking about. Otherwise, it's me trying to guess maybe what time frame you're looking at, what areas you're really looking at and whatever. So just remember that as well, and that helps out a lot on that. So there we go, guys. So we've got this going as it is. Man, oh man, I'm really going over a lot more than I planned to. Let's jump over here to the Dow. Yeah, look at this. So the Dow on this potentially, geez, look. So this will be a 1, 2, 1, 2, 1, 2 kind of thing as well, kind of in line with the other stuff. Big rally up, maybe, right? It looks like we got 1 up and then 3 back, just beyond the 50% level. Finding support at that hourly pivot. Looking for a breakout above 34,461.03. Gives us a minimum expected wave 3 target up there, 35,672.50. And here's the thing. This is what I was talking about earlier. This August, remember, I've been talking about this since August, guys, right? We were looking, this is a 1, 2, and this is the third wave down. And I said, well, maybe this is, as we started doing this, I said, if we break out above here, things get interesting because now it's an ABC, leading diagonal, 5 waves down, right? Breaking above there, that locks that in as 3 waves. So if this count is correct, we're going to print a new all-time high. And so we've got that there, but we don't have that same thing happening just yet on we usually look at the NASDAQ composite here, right? Oops. Geez, there we go. Finally. I'll get it there sometime. I know what I'm typing. Just can't type it. So here we are with the NASDAQ composite here. Again, same idea. It looks like potentially 1, 2, 3, 4, 5 coming up toward 11,686.25. But as you can see, it's noticeably further away from this mid-August swing, right? This is up here at 13,180.109. So you want to see confirmation with the NASDAQ. And by the way, the NDX looks pretty much the same, the NASDAQ 100. So you want to see, confirmation with the Dow on the break above that. You want to see the NASDAQ break above it. You want to see the S&P break above it, right? So with the S&P, we usually look at the futures, the E-minis, right? It's just the futures product of it. Again, now in this one, that doesn't look like 3 up. It looks like 5 up, right? Because this looks like 3 down. So we'll look for some breakout higher. But again, a little bit better, but not quite. It still hasn't broke out. You want it to break out here above 43.2750. And if you do, again, same idea. This looks like an ABC down, right? If we break out above there. And so why is it? Because tech has been doing worse than everything else for the most part, right? So that's why the NASDAQ would be lower, not quite as high. The Dow is higher because it is a more broad base. It's blue chip stocks, right? Different sectors and things. So it's not weighted down by tech. So that's why it's showing that overall sectors are generally doing good, right? The S&P is kind of like a hybrid of both, right? It's still heavy-ish with tech, but nowhere near like NASDAQ, right? So it kind of has, it's not quite as low as what NASDAQ is, but not as high as the Dow. It's in between. So that's why you have those differences there. But you want to see confirmation with the indexes. So you want to see the S&P and you want to see the NASDAQ now break out above that mid-August swing high. If you do that, I think there's a really strong case to be made for the idea that we're doing an all-time high, as we've been talking about possibly coming in. So yeah, that's what I'm seeing there, right? Yeah, again, and I know everybody is scared about contagion with what's going on with FTX and all that. But look, everybody's all freaking out for a week there about Genesis and what's going on there, right? And the Bitcoin investment trust and all that kind of stuff, right? Grayscale stuff. And what happened? It all rallied, right? And what I talked about at the time was the fact, I'm going to get out of here, guys. I appreciate you, hanging around and listening to my thoughts here. But, when all that was happening, Bitcoin was rallying. If the news is that bad, right? Oh no, everything's going to die, everything's going to break down, whatever. Why the excuse my language, is Bitcoin rallying? You see what I'm saying? And the reason that would be is the thing that we talk about all the time here, right? Which is the fact that we've been going down for a year here. We've had 3 capitulation events, right? We had over here with Three Arrows Capital, excuse me, over here in May, right? We have it over here in June with the contagion from that. Voyager, Celsius, all that kind of stuff, BlockFi, all that kind of stuff, right? And then we have this here with, that comes in line with the FTX thing, right? But look, after it, we talk about all the contagion that's supposed to be so much worse than FTX, right? And yet, Bitcoin is not only, just barely dipped right below, right? There's no big push, volumes down, all this kind of stuff, right? But it's actually rallying and breaking out higher. And so what that means is basically everybody is talking about contagion. Most of them are probably out of the market already. They probably blew all their money on the way down trying to buy the dip all the way down and hold it for all-time highs, right? This is what happens in bear markets. Everybody loses their money on the way down. And then when you get toward the bottom, everybody's freaking out the same way they were at the top. Remember at the top, it was all laser eyes and all this stupid things like that? And if you were doing laser eyes, I'm not trying to be rude to you, but really, it was just, it was irrational exuberance, right? Well, we'll coin a previous Fed banker term there. There was all that, right? The same thing happens at the bottom, but just different. Everybody's so fearful that's going to continue to go down. Remember, guys, we talked about this, remember? Right here. We talked about it here. We talked about it here. We talked about it here. Everybody's still swearing all the way up into the 6,000s that price was going to continue to fall down below $100. Everybody is fearful. It's irrational how fearful they are at the lows, right? I don't think there's a whole lot of reason to believe it'll be different here. Now, I could be wrong. But again, because there's nothing guaranteed in trading, but we look for those things that generally suggest a top or a bottom is forming, right? Now, you can be an idiot, and I'm going to use that term here because I've seen one already, that you can say, oh, well, you were bullish all the way down. No. I said, listen, these are the potential structures that are happening, and this is what we need to see on follow through. If it does not happen, here's our lower target, and we'll continue to adjust. But see, new traders, you can always tell the new traders are, right? They're the ones that say, at here, you have to say it's coming down here. Otherwise, you're not a trader. You're not a good trader. Or you have to say, here that it's going way up there, right? Or you have to say here that it's going way up here, right? No, I actually said that here, right? And I actually said this here to here, and then suggested this may be a bottom here, but if we got a breakdown, we'd be looking here, right? So, but if you're a trader, guys, you can't just be saying, oh, it's definitely got to go down this area. You may get it right, but this whole guarantee, this whole absolutes nonsense is going to lose your money over time. Period, end of sentence, guys. I'm telling you the way it is. You don't have to believe me. It is what it is. I've only been doing this 27 plus years, right? I've only seen all this over and over and over again in different markets, right? I can't possibly know what I'm doing, right? Guys, listen. You get a lot of people, especially in crypto, that all they've ever traded is crypto over a cycle or, one bull market or something. You have very few people that have years of experience. And of those, you have very few people that have experience in any other markets. So be careful who you're listening to and who you're applauding on and whatnot with that. If they're not being realistic like this. Trading, we're talking about trading. We're talking about, okay, so trading, here's my target, the upside. It becomes increasingly likely if we get through these levels, through these things. The more we get through these, the more likely it is, right? Here's our stop loss. Our stop loss is there to tell us that we're wrong. And if we're wrong, guess what? To the downside, here's our targets. I talk about this all the time on here. I give you guys targets up and down all the time. And then you get somebody come out and says, oh, well, look at that. He just says that so he'll always be right. It's about having targets that make sense, guys. Everybody out here can blow smoke up your rear end and tell, yeah, it's definitely going to do this. I guarantee you there is nobody you follow who has been 100% right. I guarantee it. Because you're not. But new traders come in. Remember what I told you that thing about you're not special? You do the same thing all of the new traders do? It's the same thing new traders do. They think, oh, it has to be guaranteed. There has to be, absolutes. And if they're not, well, then they're not really a trader, right? And you tell that to somebody who's been trading for decades. Think about how that looks. When I see that happen, I think two things. One, they're new to trading. Okay, that's fine. They've got an opportunity now to do better, right? Most do not, though. They continue to hang on. They continue to suck on that, right? So then I go, okay, well, obvious victim mentality. Obvious they feel like they have no control over their life. Anything's going on in the world. And at that point, there's not a whole lot I can do. I will try sometimes to engage with people and try to hopefully help them get to understanding where the irrationalness and the silliness of what they're saying is. But when their response yells back, I'm a victim and I'm never going to change, I'm not ready to open my mind right now at least, I will disengage. And you should too, guys. You should too. Keep your sanity. Who cares what some Yahoo online that isn't living your life thinks? Who cares? Right? That's right. It's not about being right or wrong. It's about profitable. Yeah, we'd love to be right and profitable, but at the end of the day, if I have to choose between being right or being profitable, I will take profitable every day. Tell me I am wrong every single trade. As long as I can be profitable, I don't care. Why would you care? Why would you care? Unless you have no real self-respect, right? Unless you don't believe in yourself. That's why you would care. Because then you care what others think. And that's all a false kind of thing, right? We already talked about that. Yep, the only absolute in trading is that you will have losing trades. Yeah, manage them properly. Exactly, Fibble Swanee, exactly. Risk management, most important thing you guys will ever do as a trader, okay? The bottom can't be in for Bitcoin yet. We still don't have the standard China banned Bitcoin news that signals to go all in. Okay, guys. Hey, listen, I got to get out of here. There was a lot of stuff in here that talks about being a better person and, just the way you view life, helping you become a better trader, stuff like that. Feel free to watch it again and go back through it and really kind of take it in, because I said a lot of stuff here that you really need to accept and grow with in order to become better, not just in trading, but just, in life as well. And if you can do that, you will have a much happier life. You will. But the work has to be done by you. I can't do it for you, unfortunately. I can tell you what it is. I can tell you what you need to do, which is what I've done somewhat, right? But you actually have to take the action. Going back to where I started, you have to take action in life. Change does not happen unless you take action. And you won't take action until you recognize that you need to take action, which means you recognize that you're thinking incorrectly or that you're not thinking the way you need to be as successful or profitable as you need to be. All right, guys? As always, that's right. The only thing you control in the market is how much you lose. That's it. So keep working on that risk management. I love that you guys jumped in here with me. Thank you so much. I'll be back on Tuesday, 11 a.m. Central Standard Time, YouTube, Twitch, and Twitter. You guys jump in if you're in Discord. I'll see you guys here in a bit. Other than that, guys, check out the mentorship program. Like I said, I've got the payment plan there. I'm willing to take on the risk for it. It does have a money back guarantee. So if it doesn't work, like I said, I use this day in and day out for years now. It works. I know it does. But if it doesn't, if it does not, if you can show me those trades where you follow the rules and it doesn't work and you're losing money rather than making money over the period, I will give you your money back, guys, because I don't want you buying something that doesn't work. Period. Okay? Along the way, you get to keep all the other education and stuff that you're learning, books, stuff like that too. So I don't know. I think if you have it, at least for the money down in the monthly thing, I think, if it's me, it's a no-brainer, right? You have no chance to lose anything. Guys, I'm on here twice a week. I've been doing this with TWC now for 5.5 years. I'm not hard to find. I'm not hard to find. It's not like, I'm going to take your money and run. How am I going to run? You guys know who I am. You know where I am. You know my business name. I am registered with government, right? I mean, this is legit business. It's an LLC. It's registered. There's no way I could hide. So, there we go, guys. Looking forward to getting that started. Otherwise, like I said, guys, jump on Tier 3 for the $50 for the next month. There is no auto-renew on that. So you don't have to worry about, if I forget to, even though we send out notice days ahead, right? But you wouldn't have to worry about, I forgot to renew. You just, for the month, get in there, soak up as much as you can. We got well over 200 hours, probably 300 hours probably, of video education at this point now. Much more than you can ever look at in a month, but you can pick and choose. Descriptions on them. Choose what you want. Go through everything else, all right? GT, what's up, man? I got to go. I hope you guys have an amazing weekend. Engage with me on Twitter, guys. I love hearing what you guys think and whatnot about stuff out there. I'm not really great at a lot of small talk, but I'm trying. So engage with me, all right? All right, you guys have an amazing day, have an amazing weekend, and I will see y'all next week. Take care.